Planning to invest in stocks? It might seem intimidating to take on this financial step, but we're all beginners at one point, are we not? And today, we're demystifying the intricate world of stock analysis so beginners can be guided properly on how to analyze them before finally diving in. This is Foxfire Finance, and we are committed to spreading the great news and concepts of the FIRE movement to anyone dreaming of a better life. We aim to help you achieve your goals by providing meaningful tips and strategies that will bring you closer to your dreams of financial independence and retiring early. But first, don't forget to subscribe, burn that like button, and ring the notification bell to be updated on our latest releases to guide you on your way to FIRE. Whether you're a newbie looking to dip your toes or just a curious mind, we're here to break it all down for you. So let's unlock this financial puzzle together. When we approach stock analysis, we essentially have two main pieces to this puzzle: fundamental analysis and technical analysis. Let's start with fundamental analysis. How do you piece together a company's health? Fundamental analysis in investing is similar to detective work, where the goal is to deeply understand a company's intrinsic value. This method examines financial statements, economic indicators, and industry conditions to evaluate a company's health and potential growth. Key tools include earnings reports, which reveal profitability, the price to earnings or PE ratio, assessing stock price relative to earnings, and the debt to equity ratio, showing a company's debt in relation to its equity. Additionally, studying industry trends and broader economic factors further shapes this investigation. By piecing together these clues, investors can make more informed decisions on the viability and long-term prospects of a company. So, what are earnings reports? These reports are like report cards for companies, but instead of grades, they show profits and losses. Released every 3 months, these reports give a snapshot of a company's financial shape. Are they raking in money or are they losing dough? If you notice the earnings are steady or even climbing, that's a thumbs up. So if you're eyeing an investment or just being nosy, checking out these reports can give you some juicy insights into how a company's doing. Next up, price to earnings ratio or PE ratio. This analysis tool is like the price tag you see on clothes, but for stocks. It tells you how much investors are willing to pay for each dollar of a company's earnings. A high PE ratio might suggest that folks are feeling optimistic about the company's future, but don't get carried away by just one company's PE. It's always a smart move to compare it with other companies in the same industry. Think of it like comparing the price tags on different brands of jeans to see which one's the best deal. And finally, always review the debt to equity ratio. Imagine a company's finances as a seesaw. On one side, you got debt like loans they've taken, and on the other side, equity, essentially the owner's stake. This ratio tells us if the seesaw is balanced or tipping wildly. A high ratio might mean the company's been borrowing a lot, which can be risky. But don't jump to conclusions. What's risky in one industry might be totally normal behavior in another. So always give that ratio a look-see, but remember to compare it with industry pals to get the full picture. Comparing the right companies is also a key factor in fundamental analysis. It's time to dive in further and learn about technical analysis. In simple terms, this is all about decoding patterns and learning how to spot opportunities using the trends and catalysts in the market. This is more about understanding market sentiment and price patterns. Are you fond of charts? No? Well, it's time to love them because technical analysis is full of them and the data they bring on the table to help you in leveraging your investments. Number 1. Candlestick charts. Picture these as mini mood rings for stocks. Each candle has a body that shows the opening and closing prices of a stock for a specific time frame, and little wicks that stick out from the body, revealing the highest and lowest prices of that period. If the body's filled, prices went down. If it's empty or white, they went up. So, in a glance, you can vibe out if the stock was chilling, having a party, or maybe going through a rough patch. It's like a visual diary of a stock's life. Super handy. Number 2. Moving averages. The moving averages represents the average stock price over a set period. By averaging out daily price changes, it provides a clearer view of the stock's overall trend, helping investors discern patterns and potential future movements more easily. It's an essential tool for understanding market direction without getting lost in day-to-day fluctuations. Number 3. Volume. Volume indicates the number of shares traded during a specific period. It's a measure of stock activity and liquidity. A high volume typically means that there's significant interest or movement in that stock, often due to news or events. Conversely, a low volume suggests less interest and might indicate fewer transactions. By monitoring volume, investors can gauge the strength of a price trend and potential market sentiment about a stock. Here's a pro tip that you should take note of. Successful stock analysts often combine both fundamental and technical analysis for a holistic view. This combination offers a comprehensive perspective, covering both company health and market trends, optimizing investment decisions. Aside from learning fundamental and technical analyses, it is also important to stay updated. Staying updated is crucial in the investing game. The finance world is always on the move. Whether it's breaking news, new policies, or even a viral tweet, these can sway stock prices in unexpected ways. So, beyond diving into fundamental and technical analyses, always keep an ear to the ground for current events. Being on the know can give you an edge in making smart investment decisions. By staying informed, you're not just reacting, but proactively navigating your investment journey. It's like having a map in a constantly changing landscape, guiding you towards informed and strategic decisions. Always be curious, and you'll never miss a beat. Starting out does not always have to be so big or grand. Remember to begin with baby steps. Jumping into the investing world can feel like diving into the deep end, but who said you have to make a big splash right away? Starting small is totally okay. Think of your initial investments as dipping your toes before taking the full plunge. And here's a little golden nugget of wisdom. Diversify. Don't put all your eggs or cash in one basket. Spread it out. It's like collecting puzzle pieces from different sets. Some may fit today, others might come into play later. This approach not only spreads the risk, but also lets you learn the ropes without huge stakes. So go ahead, start slow and grow as you learn. And finally, continuous learning is key. Here's the deal. The stock market isn't a one and done lesson. It's more like a never-ending roller coaster full of twists and turns. Just when you think you've figured it all out, there's a new loop ahead. But that's where the fun is. The more challenges you tackle, the sharper your investing game becomes. Think of each stock move as a puzzle. The more you piece together, the clearer the picture gets. So embrace the journey and keep that curiosity alive. Dive into books, podcasts, or even YouTube deep dives. Because in this world, learning never stops, and staying updated is your ticket to success. Starting your investment journey is a big step that can help you in achieving your financial goals. By understanding these essentials, you're well on your way to becoming a stock analysis pro. The stock market is unpredictable, and it is vital to keep yourself in the know. Remember to always piece together your own conclusions and research thoroughly. And that's a wrap. Did you find this video helpful? If this guide lit the spark for your wealth journey, then burn that like button and don't forget to subscribe to our channel for more tips on how you can reach your financial goals. Until next time, we are Foxfire Finance and keep that fire burning.